Welcome to the weekly market wrap-up. I'm Hannah Bernard. The bulls were stopped dead in their tracks on Thursday as markets plunged by triple digits in one of the worst trading days of this year. A slew of bad news spooked trigger-happy traders that are worried about a market correction and yet another default by Argentina. How bad was the bloodletting? Let's find out. North American stock markets had their biggest one-day tumble since early February on Thursday, and analysts are hard-pressed to identify a single reason why. The Dow Jones Industrial Average took a beating, losing 317 points, or 1.88% in value, to close at 16,563, erasing all of its gains for this year. The S&P 500 took its biggest fall in 4 months, losing 39.40 points, or 2% in value, to close at 1,930. And the Nasdaq, which had been having a pretty bright week thanks to a big rally in Twitter shares on Wednesday, was also slammed Thursday, dropping 93 points, or just over 2% in value, to close at 4,369. Now let's turn to Canadian markets, which were also hammered this week. The Toronto Stock Exchange, which had just set another record high on Wednesday, was slammed Thursday, dropping 194 points, or 1.25% in value, to close at 15,330. And the TSX Venture Exchange also took a hit, although not as hard, losing just under 1% in value, to close at 1,001. Well, it was shaping up to be a good week for the markets. That was until Argentina moved into a debt default for the second time in 13 years, after a deadline of midnight Wednesday night came and went without a single deal sprouting with bondholders. This left investors on Thursday trying to gauge the effect of the news on the broader financial markets and economies beyond Argentina. The uncertainty resulted in a spike in volatility. However, analysts are hard-pressed to lay this week's drop squarely at the feet of Argentina. According to Wes Mills, Chief Investment Officer from Scotia Private Client Group, everyone has made good money and there is no evidence that people are taking money off of the table yet. It's probably just an overdue correction in a thin summer market with a combination of factors. Let's hope he's right. As mentioned, there was good news driving the markets earlier in the week. The U.S. Commerce Department released data showing the U.S. economy has emerged from its deep freeze. Gross domestic product, the broadest measure of economic growth, increased at an annual rate of 4% in the second quarter, which was better than expected, and the decline in the first quarter was revised up to 2.1% from 2.9%. The overall U.S. GDP growth rate for the first half of 2014 is now 1.8%, which is not far below the 2% average for the past few years. The Federal Reserve announced on Wednesday plans to trim its bond buying program by another $10 billion U.S., a move that was fully expected. The Fed will now buy just $25 billion U.S. per month in long-term treasuries and mortgage-backed bonds, down from a peak of $85 billion U.S. It is widely expected for the program to end in October. In its statement, the Fed acknowledged that the economy has improved, but the central bank reiterated that it plans to hold interest rates at historic lows for a considerable time, even after the asset purchasing program is finished. This week, the BC provincial government approved a new $5.3 billion KSM copper and gold mine project in northern BC. Toronto-headquartered Seabridge Gold Corp has won the environmental approval needed to tap a massive deposit, 65 kilometers north of Stewart in British Columbia's remote northwest. The company bills its KSM project as the world's largest underdeveloped gold-copper mine with proven and probable reserves including 38.2 million ounces of gold, 191 million ounces of silver, 9.9 billion pounds of copper, and 213 million pounds of molybdenum. Upfront costs will be high, and the company is looking for financial partners and still needs to clear federal government approvals. And now to winners and losers and our picks for the week. The winner for this week is Taser International Inc., ticker symbol TASR. Shares shot up over 16% on Wednesday as Taser reported Q2 earnings of 7 cents per share, beating estimates by 2 cents. The beat was driven by higher law enforcement orders for its next-generation electroshock smart weapons. Taser is the industry leader in conducted electrical weapons, which are used to incapacitate dangerous subjects who pose a threat to law enforcement and innocent citizens, in a manner generally recognized as a safer alternative to other uses of force. The loser for this week is Ruby Tuesday Inc., ticker symbol RT. Shares plunged more than 13% on Wednesday as the restaurant chain reported fourth quarter results, once again short of analysts' expectations. The company delivered earnings of 3 cents in a share versus expected earnings of 9 cents per share. Ruby Tuesday's profit over the last 2 years has missed Wall Street's consensus in 7 of the past 8 quarters. Ruby Tuesday is a casual dining restaurant chain specializing in American cuisine. The company operates in 47 U.S. states and 15 foreign countries with nearly 800 store locations. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Monday is ISIS Pharmaceuticals Inc. with an EPS forecast for a loss of 12 cents compared to a loss of 9 cents in the prior year quarter. The California-based company announced this month that it has earned a $1 million milestone payment from GlaxoSmithKline to support the phase 2 and 3 study of its experimental drug for patients with nerve tissue disease. Next up on Tuesday is Groupon Inc. with an EPS forecast for a loss of 4 cents compared to a loss of 1 cent in the prior year quarter. Finally, on Thursday is CBS Corp with an EPS forecast of 75 cents compared to 76 cents in the prior year quarter. Here are 3 Canadian stocks to watch next week. On Monday, markets are closed for a civic holiday. First up on Tuesday is Ritchie Bros. Auctioneers Incorporated with an EPS forecast of 34 cents compared to 28 cents in the prior year quarter. The auction giant broke its own record last week by selling $49 million worth of equipment items and trucks at an auction in Fort Worth, Texas. The company looks close to a complete recovery from a major stock slide in May. Next up on Thursday is Canadian Natural Resources Limited with an EPS forecast of 99 cents compared to 42 cents in the prior year quarter. Finally, on Friday is Magna International Inc. with an EPS forecast of $2.24 compared to $1.78 in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast on iTunes and find us on Facebook and on Twitter. For Viral Network News and BayStreet.ca, I'm Hannah Bernard.